Something I hear all the time is my other lender just went by what I told them. And here's the thing. When a lender doesn't actually look at documentation through no fault of the buyer, the way things land for qualifying can be very, very different than what you'd expect. Debts, bank deposit, pay structure, credit events, they don't always count the way people assume they do. So if a lender's only going off what you say, they're also not looking for things that could make or break a loan approval later. That's how people end up getting surprised once they're under contract, and nobody wants that. My goal is simple: verify up front, catch issues early, and make sure your pre-approval actually means something so that when you find the house, financing isn't the problem.
That's exactly what I do as well. Most of you guys, when you decide to reach out to a lender, you're in one or two camps from my experience. You're someone who has watched a lot of YouTube or whatever social media platform you like, and you try to get information. And you're either someone who has had some credit faux pas in the past and you really aren't sure. So you seek to find someone to tell you what you want to hear. The other camp, you're confident about what your credit and income is, and you're not looking for a pre-qualification. Okay. A lot of you guys that aren't sure, this is what you're looking for: pre-qualification. And all that is like she's saying. You call, you pick up the phone, and you say, I make $1 million. My credit is 805, and I have $300,000 to put down, and I want to look at an $800,000 home. And the so-called lender, loan officer, wherever they work, they say, okay, based upon what you've told me, today's interest rates look like XYZ. Well, ladies and gentlemen, that ain't worth the time and conversation that you put into it. What you need to do is the latter part of what she's saying. And what we do with our clients is you want to be pre-approved. Okay. And what pre-approval is, the process of submitting a proper application. And I don't want to skip that part. In the day and time of this video, you have a whole new generation of loan officers that never actually read or looked at what's now called an URLA, a URLA, Universal Residential Loan Application. We used to call it a 1003. This document is a fact finding exercise. Let's have a survey, if you will. Those of you that are in the community that may have reached out and done a home loan consultation, put down in the comment section, how many hours would you say you've watched video-wise before you trusted me enough to reach out and say, hey, let's have the conversation. Moreover, those of you out there who don't mind sharing the information to help those in the community, after that conversation, how many of you actually submitted an application? I digress. So most of us have a digital form of that application, and that really was derived or designed to capture you and your intent, because the numbers have always shown a high probability of whoever gets that information first, that's who you stay with. And so this is why everybody's always trying to get you to pre-approval and or pre-qualify. Here, I want you to know, like, and trust me. If you're not sure, okay, if you're sketchy about your credit and you need some credit help, well, then you can continue to consume videos on YouTube. Let me go back here. YouTube until the time you're ready to reach out. And if you want to reach out to us, I have a DIY, do-it-yourself version of credit repair and credit monitoring. If you are from the mindset that, you know what, I'm not real confident and I don't want to submit an application for a real pre-approval to do all the things that the first video referenced, and you're in that pre-qualification stage, then continue to consume and educate yourself via YouTube. You guys could go to the CFPB. That's the Consumer Financial Protection Bureau. It's a government sponsored website for consumer protection. You can learn a lot of things there. One of it, which in the context of what we're talking about, is how to repair your credit, if you will, or put it back on right track. And more importantly, how to understand, because we want you to understand the foundation of a thing so that going forward, if something happens, you don't have to keep paying everybody or going on this rabbit trails everywhere trying to piece together information, you'll know and understand from the ground floor how to handle things. I agree 100% on what the first video was saying, because there's a huge difference between a pre-qualification and a pre-approval. And if you want to go out and shop with confidence, you need to deal with someone like the first video or myself, where we're going to go through that fact-finding mission, do that work up front, look for any initial issues that may pop up based upon our experience in the business. Remember, I'm licensed, National Mortgage Licensing Systems, NMLS license number 180100. You could go to that. You could type that into whatever browser you use, go to the Consumer Access portal and type in that number 180100, and you can see my provenance. Most of these folks that you're talking to online, not to say that I'm better because I have a license, but I have a license and the history and the success of helping people get onto the housing ladder in the right manner. That matters. But you can check me out, opposed to some of these other folks that have you doing all of these plays and tricks and hustles only for you to be disappointed because you were pre-qualified. They took what you told them opposed to being pre-approved. We went through the fact-finding data. I know what questions to ask. I know what documents to get. I know how to decipher the documents and line you up with the proper product based upon your goals for you and your family. I think I make my point. Leg up.
Most people think once they get pre-approved, they're good. However, that's not how it works anymore. I'm seeing people get approved and then lose the house 2 to 3 weeks later. Same income, same job, same person. So what is changing? The rates. And nobody is explaining this clearly. That approval you got, it was based on numbers at that moment. But when the rate shifts, even slightly, your buying power shifts with it. And now you do not qualify the same way that you did before.
I'm going to stop her right there because she hit exactly where I wanted to go next. So if you do go through the process and get pre-approved the proper way based upon what I aforementioned in the first segment, then this is what you need to know. That scenario, that pre-approval is really only good for that moment in time, that day. Why? Because rates move on a daily basis. A lot of you guys that are questionable, you have a questionable credit history. I get these questions all the time. How long is the pre-approval good for? Really, it's only good for that day. I'm going to say that day because interest rates move on a daily basis. Are you saying then, Robert, I should not qualify until the day of I'm ready to buy a home? No. What I'm saying is we have to get you to a point where you understand the process enough and you're applying at the right time. Okay. And when I say the right time, here, give me a second here. Let's go back. What's the right time to apply? The right time to apply is when, number one, there's a life event, right? Marriage, divorce, increase in family size, right? Job opportunity. Those things. I have a video on the channel where you can go and find out, in my opinion, the reasons, the life events that cause you to move into a primary residence. Okay. We're not talking investment. If we're talking investment, we're talking something completely different. We're talking about the home where you're going to lay down roots. And as I always said, you have to be there minimum 5 years, 5 years and the greater that you want to be in the house before you make that decision. So that's the first thing. The second thing is, can you afford it for reals? This is where we go back into the ratios. Okay. Got a video on the channel where we're talking about ratios, but your front end ratio, let me give you a range. I'll say your front end ratio is 28% to 33%. 33% is on the high end. Your back end ratio, I would say, I'll say 38 to 43%. Now, are you saying, Robert, there's no programs out there that you can qualify with higher ratios? Yes, they are. But we're trying to prevent you from having remorse and it's situational. So those of you out there that may have situations where you have to get in with higher ratios, I'm not saying you can't, I'm saying it's not optimal. And so do I help people with higher ratios? Yes, we do. But I do a doggone good job of explaining to those folks what you're working with and what wiggle room you have. So preferably, those of you that are watching these videos and educating yourself and deciding if I'm the person that you're going to know, like, and trust to move forward with, that's why we're doing this, so you can start getting prepared. Front end ratio. Remember, the front end ratio is where you take the proposed house payment, the principal, interest, tax, and insurance. You could get that on that pre-approval day. If you've done it correctly, your lender should be able to give you a realistic picture of what the principal, interest, taxes, and insurance would be. And you divide that into your gross income. And that gives you your front end ratio. Your back end ratio is where you take the PITI, principal, interest, taxes, and insurance, and HOA fees, or whatever goes into that total monthly payment, principal and interest, and cost, taxes and insurance and HOA fees, plus your liabilities, the bills that you're going to have on a monthly basis that we're going to count. And some of you guys have undisclosed liabilities like Affirm, Afterpay, Klarna, but you got to make sure you account for those. You add those up and divide that into your gross income. Okay. And this gives you the back end ratio. So this is the front door. This is going out the back door, right? All right. So that's what I would say to you to answer that question as far as can you afford it? And then the third and most definitely not least is what do you have left over? Reserves, or I like to call them compensating factors. After you spent that 3 to 7% to get into the house, down payment plus closing costs, moving expenses, utility hookups, all of that, do you have a minimum of 1 month, and that's for sure playing Russian roulette, to 3 months of your principal, interest, tax, and insurance payment and other costs in a reserve account that you can touch for when life happens? And I'm not even taking into account, those of you that are watching the channel, I'm not taking into account the maintenance factor. If you take VA, or you take the square footage and multiply that times 14 cents, and that gives you the monthly amount that you should be able to put away from payment one. And this formula, in my opinion, if you can successfully do that and keep your ratios intact here, then when the water heater or a washing machine or the AC needs servicing, all those things that need to happen, you have planned for it. Plus, after closing, you weren't house rich, okay? House rich and cash poor, right? How should we? Yeah, we'll do it like that. Hopefully that makes sense. So this is what she's saying about the rates. And this is what I mean with all of that. Okay, with all of that, this is why I'm saying, how long is the pre-approval good for? That day. But if you have all those other things in place, right? Those 3 things that I just went over, then the pre-approval is good for 90 days, right? Sometimes 4 months, but it runs lockstep with your credit report. And so many things can change from that time. But if you understand the principles and the things that I just went over, worst case scenario, all we have to do when you find a house and contract on it successfully and then go under contract to purchase the home, then if rates change, we're still not out of the ballpark because we went through the proper qualification. It's a 10,000 foot view, guys, but hopefully this makes sense to you. So now I'll bring out a little bit more because that's why you're here, right? You're here to understand this home buying process. We want to make sure we do it right. I want to give you an opportunity to get into the conversation. What I've said thus far, if you agree, let a brother know, right? Let the algorithm know because it'll push it out to more folks. If you're watching this video and you watch it and you have on your mobile device and it asks you if you want to hype it. That allows other people to get access to this information. Doesn't cost you anything. And those folks will thank you for it. And I do as well. But give me your opinion. Agree, disagree. Is there anything you can add? This is a community, and we're trying to help those that are coming along the way not make the same mistakes we may have made, okay? Because we need folks to be successful in home ownership. It just affects so many other areas in life. Let's continue.
This is absolute bullshit, and I'm really worried we're going to start seeing more of it, so be careful. See, I got this pre-approval letter from one of my realtors, Jamie, and she's really smart, so she knew something was wrong about it. And she's right, it's a complete piece of shit. Look, $360,000 loan amount, FHA loan, at 5%, that's a fantastic interest rate. Except, look at this, nearly 4% in discount points. That adds up to nearly $14,000 on this mortgage. That's on top of your down payment, on top of regular closing costs. So this client would have been looking at like $35,000 coming to the table for this loan.
You see what I'm saying, guys? This is why I say the pre-approval is better than the pre-qualification. And regardless of which one you get, preferably you get a pre-approval, you got to understand the numbers. As he was saying, a $360,000 purchase price, right? With 5 points. We'll just call them points. Okay. Some of you guys may not understand points. I'm gonna give it to you the way I understood it, right? Because I'm just a simple guy. 1 point is equal to 1%. Whenever you get to 100 in the lending business, we call this par. Par for the course. I don't know if you've ever heard that statement. But whenever we run run loan scenarios based upon the loan amount, the purchase price, where you're buying in the country, the loan to value, your credit scores, a lot of different variables makes one's interest rate at that time. Well, you'll have rates that start at par, and then anything above par, okay, is actually a credit. So if you have a rate that says 101. This means that there's 1% that I as a lender could give back to you as a credit. If you have a rate below par that's at 99 on pricing, this means that this is a cost of 1%. Just easy example. So in the video that we just watched, a lot of you guys have been trained to hear interest rates. Got another video on the channel where we talk about annual percentage rate, because whenever you see the interest rate in that example at 5%, even if you don't understand this concept, when you see the APR, that APR was probably 8%, okay? Well, what this tells you here as a layman or woman is that there's cost. And these costs that are associated with the APR are costs that are cost for you to borrow said money. So there are more costs that are associated with buying a home, but not all costs are APR fees. So APR is an alarm. It's sounding the trumpet saying, you know what, my interest rate is this, but why is the APR this? Well, in his example, 5% sounds great, but it was at a cost of $14,000 additional dollars plus down payment and closing cost. And you'd be surprised, a lot of folks run into this. A lot of folks that go to larger lenders, I call them order takers, they do a lot of advertising. You probably see them everywhere. A lot of us as consumers, we just want it quick and easy. And somebody told me I was approved, right? Then we just go with it, and I got a 5% rate. Say this with me. Nothing is free. If it sounds too good to be true, it is, and there's cost associated with it. You just don't know where they are. So, not to belabor that point, pre-approvals are only as good as the paper they're written on, and they're really only good for that period in time because of rates changing. In this case, because of points that are being charged, you may not have that money. But you don't know that. You just heard 5% and they have you locked in, and you might go through this whole long process and end up losing your earnest and option money and not getting a home and an inspection cost because you're listening for what you want to hear. But good news is that's why you come to these channels, so you can hear what it is that you need to understand and learn and not move forward until you have some understanding of the concept. Now you know how to go out and find the right partner, if that makes sense to you. So I got one more video. I saved the best for last. So if you stayed around, this question is something that I want all of you to ask your lender going forward. Get this game.
Okay, guys, if you're in the pre-approval process or you just got pre-approved, you need to ask your lender this question. You need to ask your lender what is the max amount of taxes that you are pre-approved for. If you have a pre-approval for up to $500,000 with the max taxes being $7,500 and you like a house that's $500,000 and the taxes are $10,000, you will not be able to afford the house.
Guess where you find out what your maximum taxes and insurance during your pre-approval. You can't find that out during the pre-qualification because remember, you're telling the lender what it is that you believe to be true. All of these mortgage loans, your bank, your credit union, most of these loans are going to get packaged up and sold on the secondary market as a mortgage-backed security. They're going to be a part of somebody's investment portfolio, probably in some of your 401ks. That's why we need people that are going to pay their bills on time, all the time, every time, because your debt is someone else's income. That's facts. And so back to what she was saying, you got to know what your maximum taxes and insurance payment is, and you'll find that out during a proper pre-approval. That way, you're not wasting your time looking at houses that are going to exceed what you can afford. One other thing, if you want to know yourself, and I tell everybody this, once you've been pre-approved and you're out shopping with your realtors, right? This is something that we deal with the folks that we deal with, but you need to get an insurance agent on your team ASAP. ASAP. Why? I'm not an insurance agent. I don't make or determine what those fees are. You could start with your current insurance company while you're shopping, and then you could go and shop later once you find the house that you actually under contract with. But in order to find out what your true principal and interest, tax, insurance, estimated payment will be, not what you want to hear, you have to give your lender, okay, this insurance quote ASAP. I got a veteran just today sent out a text message because the realtor, we all work as a team, and I'm saying, hey, agent, this is the house. We need this much from seller contributions because you have not, because you ask not. If you don't ask, you won't get. The sellers may or may not contribute, but if they do, that's less money out of my buyers or our buyers' pocket, right? We work along those lines, but I digress. But we have to be on the same page. And so if you got these loan officers that you can't get in contact with and they don't want to give you any numbers and they talked to you 4 months ago when rates were lower, they're higher now, and then you go out and spend all this money, this is why we're getting all these heartburn videos on all these social media sites, making a lot of you guys think that home ownership is just some crazy type situation that you don't want to be involved in. Whole time, it's just because of how the process went. So with that, if you've gone through this video and you said, you know what, Robert, I like what you're saying. I've been watching you on the low. You know, you guys know who you are. I'm starting to hear y'all saying, hey, bro, I've been watching you. I appreciate that because time tells all. That's what my wife says. You judge a tree by the fruit that it bears. And it takes time because we all can't make moves at the same time. But you've been watching. You said, you know what? I'm ready to take that next step. What is it? Home loan consultation. Go in the top pinned comment, click the link, schedule a consultation, or in the description of this video. Let's have that conversation, see if there's a fit so that we can see if we need to move to the next step of the process where we get you properly pre-approved. For those of you that aren't ready, continue watching the videos. In fact, watch these 2 videos here. They'll continue your education as you get ready and prepared to get on the housing ladder successfully. Because remember, around here, we simplify the home loan process. Y'all be good to one another. Let grace abound. Indeed, y'all stay blessed.